It's fascinating, isn't it, Eli? Because it does seem like international investors are questioning whether or not China Inc. is still worth the risk after this latest wave of regulatory crackdowns. If the bull case is still intact, what's your sector preference and where should investors be looking?
That's a great question. You're absolutely right. Now, if we step back and take a long-term horizon, the general direction of China's regulatory, framework is quite clear and is quite sound. Not too different from what, frankly, the US and EU are trying to do with the tech giants in the market as well. We do think that while the tech sector could, the volatility could take some time to clear out, there are still opportunities in the semiconductor sector, the telco sector, for instance, and also sectors that are key to Beijing's long-term strategic goals, such as AI, 5G, renewable, infrastructure, new energy vehicles, to name a few. And these sectors are actually slated to receive increased government support, not the other way around, over the next few years. And, if investors throw out the baby with the bathwater with this sell-off, this could be very attractive opportunities.
Eli, I also wanted to ask you about the outlook more globally as well, because it does seem like the porridge is starting to turn cold. Record-setting day for the S&P 500, but how sustainable is this bull run with investors eyeing concerns around COVID, the Fed, the China growth story, and other black swan events on the horizon?
That's a great question. Now, the bull market is still intact in our view. The recovery, if you zoom out, by and large, is still intact. We are still in a growth phase right now. But of course, with the S&P not having, seen a significant correction for now almost 15 months, that scope for volatility continues to increase in the background, right? And the volatility, the scope for volatility is there due to the uncertainties from the Delta variant. And now we think that uncertainty is already starting to be reflected in the rates market. The 10-year has gone down to below the 1.2 level. And also in some sectors in the S&P, for instance, the airline index, it has fallen to near the levels that we saw last October, which suggests that concerns over growth are creeping into the picture. And I think over the near term, investors should be cautious about the scope for some sharp volatility.